Time for the Tesla weekly update here, and I have Tesla pulled up on the weekly chart. And just to point out right here that Tesla did not close above this 382 at 221.26. If we zoom in a little bit, you can see that it closed a little bit below. But that's nothing really to worry about. It's still a zone, as you can see in the past. It did wick through many times before, and that does not change this as a support zone, especially if you add on the confluence of the Ichimoku, and this closed exactly right above the conversion line, that little blue conversion line at 219.21. So it's still a bullish setup, even though it did close below the 382 and it closed below the cloud. It's not that big of a deal, simply because we have a lot of confluence showing that this is a support zone, and I'm going to show you that right now. And the first reason is because of this arc, right? This orange arc that I've mentioned so many times before. It looks like it has flipped this zone to support. Now, we can see that possibly this is going to be resistance on the way up back to this blue angle, maybe around 228. So it could be just stuck in a range, just maybe bouncing between these levels, maybe even trending down this arc a little bit in the weeks to come before it really finds its new higher low. So this arc, in my opinion, is going to hold as support. And there's even more confluence of that with this angle right here that I always show. Right here, it hit there perfectly this week, and it held and it closed above. So it's not like it's going to rebound right away and explode higher. It could keep retesting these lower levels in the weeks to come, just to scare people thinking it's going to collapse. But in reality, it's just building a new base to go higher and higher. So let's go back to that the Gann chart here. And we can see that if price did continue lower, what would we see if we put on our SMAs here? We put on the 821 right there. We can see some confluence coming, right? So around 208, around 210, there is the 100-week moving average, and there's also the 50-week moving average right there. And then we have this green angles, our green line sloping up, which is at 215. That's the 8 EMA. And then the 21 EMA is at 214 right down there. So what I can see, let me just zoom in more and more, is possibly what could happen next week. Price could come back up to maybe 228, maybe even the 200-week moving average, 232, and get rejected in this zone. And we could probably see something like this, maybe come up here, and then maybe come back down, right? And maybe come back up again, right? And then possibly come back down. And then possibly by that time, maybe even in August, then that's when these moving averages would meet up with the price. And then by that time, price could be able to move higher and higher. So we could see some time before price explodes back above this blue level, right? So it just depends on if there's any kind of positive news or a catalyst or whatnot to break above. But the way I see things right now, it's in between a range of support and resistance, and it might be just riding this arc down until August or even maybe September or so before price can break free. And the range that it's really stuck in is going to be between this 100-week at 208 and the 200-week around 232. So that's a pretty wide range, right? So even if price does continue a little bit lower, it's not really that bearish because it's just meeting all of this support right here, right? It's just meeting the support of the 8 EMA, the 50-week moving average, the 100-week moving average, and the 21 EMA. So by the time all of these meet up together, it could be later on in August or maybe even into September. So just going to keep an eye on this, but all I can see right now is because of today's close, because of this weekly candle close, it looks like it's going to be stuck in a range. So even if it goes back up to 230, don't get too excited yet. And even if it goes down to 208, don't be bearish yet, right? It's just in a range. And I'm not going to change my thesis until we get a weekly candle close back above this 200-week moving average. Or if something does break down further below these levels here, in the lower 200s. And then I will be a little bit more cautious. But until then, it's just stuck in a range until price continues down this arc until it's ready to break higher. And the last thing I wanted to show you guys is this original log scale GAN that I used to show in the past. This one has that level at 200, right? Right there at 200. So this also could be a possible backtest of this 200 level, right? Let's not be afraid of that level. Let's just look at this chart and see how important it was, right? So if price does break below temporarily those 150-week moving averages, it could wick down to this level, but that would not be a bad situation at all. That would be perfectly normal for a move higher and higher. So no matter what we're seeing on any chart, whether it's linear scale, log scale, or whatever, it's looking like from current price all the way down to the low 200s is going to be support, right? Let's not be bearish about that. This is looking like it's going to flip to support no matter what, and our back test is perfectly normal, so it's okay. And once we find this new higher low, wherever it is, whether it's here or a little bit lower, then by that time it'll be ready to move higher and higher, and then it'll be ready to challenge the 290s, which is on this chart right here, right? Once it finds that new higher low, it'll be able to challenge this new level here around 290 all the way up to maybe 300, 310. That'll be the new resistance zone after that. And then once that breaks, it's all-time highs, and then it's free to go exponentially higher after that. So it's just a little bit of waiting game until we break out of this range, but just have some patience. And once we see some sort of higher low, then good things will come.